In the 1970s, the US saw some of the highest rates of inflation in recent history, with the inflation rate reaching double digits. The Great Inflation of the 1970s began in late 1972 and lasted all the way to the early 1980s. It was a huge disaster caused by the sudden rise of oil prices and heavy government spending that led to severe unemployment, with interest rates rising to nearly 20%, a number that sounds absurd to most people right now. Meanwhile, in 2022, commodity prices are surging due to the recent conflict between Russia and Ukraine. And this happens right when the economy has just reopened after being hit by the global pandemic, following periods of massive quantitative easing policies, leading to inflation surging to 6% over the 12 months through January 2022, far above the Fed's target of 2%. From this oversimplified explanation, we can already see two concerning similarities. First, the supply chain disruptions caused by the pandemic and the supply shocks caused by the conflict in Ukraine closely resemble the two oil shocks in 1973 and 1979. And the easy monetary policy, which was used to stimulate the economy during the pandemic, resembles the excessive government spending and debt creation in the early 1970s. The main concern is that as inflation remains high, the Fed and central banks worldwide will once again need to undertake a much more forceful policy response than anticipated to bring down inflation, like what Paul Volcker did when he raised the federal funds rate to 20% in 1979, which did work really well to curb inflation but ended up causing a painful recession in the process. So, what is going on here? There is a lot of concern about inflation right now, and comparing it to the dark days of the 1970s probably makes it even worse. But before we jump to conclusions that inflation will not be contained or we are heading into a recession, it's best to examine both the 1970s and today's inflation and understand the similarities and differences between the two. There's much that we can learn from this, so let's get started right away. Okay, so I briefly explained the cause of the 1970s inflation, which was the two oil shocks in 1973 and 1979. But prices actually started creeping up in the 1960s, when the federal government was spending heavily on the Vietnam War and the Great Society program. The latter specifically brought about major spending programs when the US fiscal situation was already being strained by the war. So much so that it required breaking the dollar's link to gold, because the claims of gold that were being turned in were far more than the amount of gold available. This prompted out the amount of money and credit that fueled the 1970s inflation. And while the two oil crises were the most significant shocks during the 1970s, all kinds of commodities from oil and coal to agricultural crop prices were rising rapidly during the 1970s. For instance, the price of grain spiked in part because of a massive drought in the Soviet Union in 1972, which greatly reduced its food output and led it to purchase the US's entire wheat reserves and push up food prices worldwide. The combination of high inflation with weak economic growth and high unemployment, fueled by repeated supply shocks, created a situation known as stagflation. And it all compounded into the dark days that people are terrified of, especially now that many believe it is going to happen again. But before we jump to conclusions, let's talk about what is happening right now. Inflation has risen over the past year from less than 2% to over 6%, the highest level since 2008. And it is now running way above the central bank's inflation target in almost all advanced economies. In particular, the commodity price surge caused by the conflict between Russia and Ukraine is especially concerning, as it poses a huge challenge for the Fed and central banks around the world. Even before the invasion, the PCE price index, an important measure for the Fed, averaged 5.8% over the 12 months until December 2021, the highest rate we've seen since 1982. This surge in prices was contributed by several major sectors. Both energy and vehicle each accounted for about 1/4 of the 4% increase in inflation. The higher energy prices greatly increase inflation, but aren't really that unusual. Oil is always volatile, and oil prices were pretty low in 2020 because of the pandemic. But the price increase of vehicles was unexpected because this is a sector that doesn't have volatile prices like commodities. But then again, vehicles have been in short supply since last year, mainly caused by the semiconductor shortages around the world. Supply chain disruptions along with strong demand were also the cause of inflation in other vital sectors. For example, non-energy services, which encompasses about 60 to 70% of all consumer spending, added 0.8 percentage point to the 2021 increase in inflation. But more than half of this increase was caused by the economy opening up again after the lockdown. As in 2020, the prices of airline tickets and travel accommodations plummeted among others. In order to combat this situation, the Fed has begun steadily increasing interest rates. It increased the Fed funds rate by 1/4 in March and is expected to increase it by 0.5 point in May and June. And the financial markets also expected the European Central Bank to do the same thing. Now, we haven't even touched on the most important part of the story yet, the invasion. The main impact of the war on inflation will be through higher commodity prices and even worse supply chain disruptions. Russia and Ukraine are major exporters of many commodities like oil, natural gas, wheat, nickel, and many more. Supply shortages, shipping disruptions, and firms withdrawing from Russia will raise commodity prices even more, on top of the price increase from the pandemic. If supply disruptions continue and commodity prices rise up even more, then inflation may stay at the rate it is now or even continue to rise, which may force the Fed to raise interest rates even more to combat the inflation, possibly triggering a hard landing like in the 1970s, with the possibility of a recession and rising unemployment. But of course, today's situation and the situation in the 1970s are much different, so we also need to look at the differences. One piece of good news is that the magnitude of commodity price jumps has been smaller than in the 1970s, at least at the time I'm making this video. During the 1970s, oil prices quadrupled in 1973 and then doubled in 1979. Today, oil prices in real terms are still far lower than in the 1970s or in 2008. Another difference between today and the 1970s is that for now, increases in inflation have been concentrated narrowly in a few energy-intensive and pandemic-affected sectors. In contrast, inflation in the 1970s was broad-based, affecting virtually all sectors in the economy with similarly high inflation rates. This means that there is still hope that inflation will decline, especially in non-volatile sectors like vehicles, as supply disruptions ease and production expands. Again, this is a developing situation, so it might not be that way when you're watching this video, especially as there is a possibility that inflation will broaden across sectors and commodity prices will increase even more. So, is this something to worry about? In my humble opinion, yes. There are a lot of concerns about inflation and economic slowdown, and the Fed's raising interest rates will eventually slow the economy. Global supply chain pressures might continue to intensify more than the Fed's projections. And there's a considerable amount of uncertainty about the effects of the invasion of Ukraine that could continue to raise energy prices with spillover effects on other prices. The question is whether a small increase in interest rates will be enough to contain inflation, or prices will rise more than expected and in turn, central banks need to raise interest rates even more, with the possibility of an economic recession. If you like this video, you might enjoy my video on how the mafia operates in the legal economy, where I explain about criminal organizations and how they use legal businesses to gain power and profits. This is Doverhill, and see you next time.